Norges Bank has the tradition of leaning against a wind from the financial system to counteract a build-up of financial imbalance. Halfdan Grangard, Handelsbanken. Norway's oil and gas production dropped by 10% according to the government. What has led to this decline in the market?
Yeah, it's true that it's declined by 10%, but that's going back to the absolute peak in 2004. And comparing that to 2015, the decline has been about 10%. And the fall since 2004 is due to a reduction in developed resources. And with non-renewable resources, it's just natural that at some point we reach peak production. That seemed to have happened in 2004. And it's not a result of lower oil prices in the last 2 years, as I mentioned, because for the last 5 years, I think production has been more or less stable. So the result of lower oil prices could manifest in the future through a fall in exploratory activity and then maybe a reduction in known reserves down the line. But we haven't seen that so far. And the best projections of production going forward is that the trend is still going to be flat for the next 5 years as well.
Norway has left its interest rate unchanged, sending the NOK to its highest level this year. Why did they leave this rate as it is?
Yeah, so if we backtrack to the meeting in June, they signaled a 100% chance of cutting the interest rate to 0.25% today, which they decided not to do. And they pointed to two main factors, which explains the change of heart between June and September. And the first one is that consumer price inflation has been substantially higher than expected in June. And that's likely a result of a stronger than expected pass-through from a weakening krona. And they also pointed to higher than expected domestic demand, which is partly driven by higher housing prices and an acceleration in housing construction. And then also Norges Bank has a tradition of leaning against the wind from the financial system sort of to counteract the build-up of financial imbalances. And as such, the higher than expected housing price inflation also likely had an independent effect of pushing the interest rate up. But all that being said, they're still keeping an easing bias going forward. And the rate path they published today includes about a 40% chance of a cut in March.
What drivers will have the most impact on the Norwegian economy in the run-up to 2017?
Will be the NOK exchange rate, government spending, as well as housing prices. We've seen a weakening of the NOK in the last couple of years, and it's been a good buffer for the manufacturing industry and also tourism and other exports over the last years, while oil price investments have been falling. And as long as the Norges Bank doesn't change tack completely in the last quarter and keep an easing bias, we think that the NOK will stay quite weak forward. And that's going to be a positive for the industries that I mentioned. And also, government spending has accelerated substantially the last couple of years. The impulse to the economy is very high in 2016, and I think the impulse next year is also going to be substantial as the economy is still struggling with the consequences of lower oil investment. And we should also mention that 2017 is an election year, which normally leads to increased spending, everything equal. And finally, the housing prices, they have been accelerating over the last year, and that gives a real boost to residential construction. And housing investment is now actually a higher share of GDP than oil investment, and that's a first for the last 10 years. And going forward, we expect that housing prices is going to continue to be an important growth driver going into 2017.
Well, thank you for speaking with us today. That's all for today's broadcast, but be sure to check back for the weekly wrap-up on Friday. Goodbye.